everyone. Thank you so much for coming to our live recording of Cubicle the CEO. I'm joined by my two special guests. We have Bridgitte Mallinson and Shannon Davenport. Thank you so much for joining me, ladies. We're really excited. Today's conversation is going to be focused on how much money these women have raised and more specifically how they've spent it. So I know in the media, we like to talk a lot about how much money we've raised. That's often the highlight that is shown. But I think it's equally important to talk about how we actually utilize that money, the burn rate, and that kind of sets the stage for what our conversation is about today. But let me give you a formal introduction. So I'm going to start with Bridgitte. So Bridgitte Mallinson is the founder of Gut Personal. This is a company that's powered by a women-led team of registered dietitians and gut healthy experts. And they're on a mission to eliminate gut issues for good. I think something we can all stand behind. Woo, yes. Their unique, personalized approach to wellness involves customized supplements, gut testing, and health coaching to help women achieve lasting relief. Welcome, Bridgitte.
I'm so excited to be here.
Thank you for being here. I'm going to ask you your Cubicle the CEO story in just a second, but first I want to introduce Shannon. So Shannon Davenport spent 12 years as a trend forecaster and consultant in the beauty and retail industries for clients such as Estee Lauder, P&G, Unilever, and Target, where she analyzed consumer insights, industry data, and future trends. During her research, she uncovered a massive opportunity to build a body care brand in an emerging space. I actually just got to try it when I went to the bathroom, washed my hands with Esker hand soap. It was very luxurious. Now, as a mom and entrepreneur, Shannon's goal is to share Esker's self-care mission with the world. Thank you, Shannon, for joining us.
Thank you.
Super excited to have you both. We like to kick off the podcast by asking our founders, what's your Cubicle to CEO story? If you could sum up in 60 seconds the catalyst that made you leap from employee to entrepreneur, what would that be?
Yes. So, oh my gosh, where to start? But I was a registered dietitian. I had a lot of gut issues, and I have to start there because I really think as entrepreneurs, when we move into that space, we have to have so much passion to be really successful. So I found functional medicine, which really got at the root cause of dysfunction. And I was always creating my own job within other companies. And then when the pandemic hit, I was working for two men that really didn't see my worth and didn't get that raise I wanted, thank God, right? And took my business online June 2020. And that was my first business where I was a registered dietitian doing one-on-one coaching. And then Gut Personal came about a year and a half later. But it was really the pandemic, that really accelerated things and got me into the CEO seat.
The shift from services to a tangible physical product, I always find, it's quite a huge leap, right? Very different types of businesses. What made you think I need to go beyond one-on-one and, really create a product that can reach the masses?
Yeah, it was really the realization, a couple different things, but the realization that I was helping hundreds of women when I knew I had the capacity, the drive, and the passion to help millions.
Yeah.
And honestly, in the business sense of things, I was trading my time for money. And I knew, I always had this idea of a supplement company. Pre-pandemic, I was a supplement buyer. I was working at a wellness store. And I knew we could do it better because so many people were coming into the store and saying, well, I took a probiotic and I felt worse. Myself as a registered dietitian, I was like,
something's wrong.
Please don't take a probiotic at this point. And, that was 4 years ago when a lot of quizzes online and a lot of personalization was not where it is today. Thank God, I think we're in the forefront of that. But I knew I could do it better. And so really my drive came from helping millions. And then also, on the wealth side of things, building long-standing wealth for my family that, I have a 7-month-old daughter who's here now. Some of you have already held her. And I wanted to, at some point spend more time with my kids and be a mama CEO. So that was really the driving factor. And I think the services side has helped me accelerate the CPG and how I market so much better. So it's been a blessing.
I can absolutely attest to that. I think when you work one-on-one with people, it accelerates essentially your depth that you can go with a customer and really understanding their needs and what the decision points are around, right? So you can really speak their language. So I love that. Shannon, what about you? What was your catalyst that moved you from a corporate job or a cubicle or whatever you were doing prior and into the CEO role?
I never thought I would be an entrepreneur, ever, ever, ever. My mom was always a working single mom, and I remember I had a really big realization at one point. I asked her, like, how should I ask for a raise at work? And she was like, I don't know, Shannon, I've never asked for a raise.
Wow.
And I was like, that is really, that's really sad and unfortunate. And I mean, my mom is amazing and she did an incredible job. But in my mind, being raised the way that I was raised, it was always like kind of a pipe dream to be an entrepreneur. Like, how do you actually do that? How do you actually make that work? I didn't grow up with a lot of money or resources or like lots of successful entrepreneurs around me. And so I had a 12-year career before that. And there's a reason that I did that. And, you know, a lot of it for me was financial security. I had student loans. I didn't have any help. I got into crazy credit card debt when I was in my early 20s. So I never saw this as my path until I had really, really worked in the corporate world, saved money, which is virtually impossible in New York, but somehow I managed to do it. And then I kind of had like an itch because I was a trend forecaster and my job was to be looking for newness on behalf of my clients. I started to get really cranky and salty around my clients because especially when I would talk to them about sustainability, I would go into these big companies and they were like, well, there was a study 3 years ago that says that like everybody wants sustainable products, but they're not going to pay more for it. And so like that was like the one white paper that like every corporate company just kept using and using again and again. And I was like, guys, you're just wrong and you're kind of being assholes. And this, I'm tired of talking about this again and again. So I was kind of banging my head up against the wall, like talking about trends and talking about the future consumer with corporate companies. But I was very shy and timid about like wanting to actually be an entrepreneur and feeling like I could do it financially.
Right.
And so my husband is my creative partner. And one of the things that we talk about is when you have an idea, like try not to talk about it because sometimes you get the high of having an idea by talking about it to other people. You're like, hey, I do it all the time. I'm like, I have an idea for a startup for like whatever. Like I'm not going to do it, but it's like my next idea is like a lip gloss that kids can eat or whatever it is. And by talking about it, sometimes you get that serotonin boost. And so for me, what really led me to actually starting something was like, being quiet, putting my head down. I worked nights and weekends. I didn't talk about it until I had something ready.
Yeah.
And it wasn't until I like did that, did all my research, had something to say and to do that I was actually able to like finally make the leap. And because I'm very fiscally conservative, or at least I used to be now, I throw all caution to the wind. But in terms of like having a salary and being able to pay myself, I wanted to make sure that I had a viable concept before I quit my 6-figure job in New York City. So I actually showed it to some buyers first and made sure that they were like, yes, this is good. And so I remember after having my first baby, I put some pants on for the first time after living in sweats. And I met with the Goop buyers and they got it. They understood the concept. And I was like, okay, if they get it, I'm not totally crazy. Now I will take the leap.
That's awesome. You know what? I really stand behind that because I think a lot of times it's so easy to, like you said, go out and like seek input from people and everyone can tell you have a great idea. But I always say it doesn't really matter until someone gives you the first dollar, right? Like you can validate your idea all you want and people may be encouraging and tell you like, I love this, I'd buy this, but it's like, show me the money, like show me that you actually really believe in this thing by paying that first dollar. So I'm so glad you went and truly validated your idea with a buyer before you went full force publicly into this venture.
Yeah. So I was like a very risk averse person for multiple reasons, and I managed to do it and push myself off the ledge. So like, even if you don't have that entrepreneurial spirit or you weren't raised around that, like you can still do it. You can still make it happen, even if you're basically a scaredy cat, which is what I was.
Super encouraging. Okay, let's get into some of the numbers here. I would love for each of you to share how much have you raised in capital, and at the time that you went and sought funding, what was the primary purpose that you intended to spend this capital on? Like, why did you need the funding? So, Bridgitte, I'll pass it off to you.
Yeah, so we're in the middle of our second seed round. So we've raised $590,000 to date.
Congratulations.
Thank you so much. I'm kind of the opposite. I like love risk and I love like I'm an Enneagram 7. I'm like, here's my idea, get behind me. So this will be a great conversation because we're very different.
I like the perspective.
Yes. So I had this mentor when I was going to start my company who, I was going to bootstrap my company. And something that he said to me was really powerful. He's like, do you want to do this quickly or do you want to do it slow with your own money? And I always like doing things fast. I grew my first business very quickly. And so it was to launch the company. So our first seed round was $425,000. We were going to raise much more than that. We didn't need it, so I stopped it early.
So in total, 590,000 is what you've raised today. And you said you wanted to use this money to increase your speed, right? But speed to what? Speed for product to market?
Yeah. So product to market, we were 3.5 months.
Wow.
Really
From
fast.
ideation through development to like I have a tangible product.
Yes, because
ready to sell.
I already had built the company in my mind. It was a conversation I had with a girlfriend who was a business coach at the time who said, Bridgitte, you've always had this supplement idea. Do it. And it was, I'm very quick to take action when something is aligned for me. And so it was a conversation. I started talking to marketing agencies because what I knew I couldn't do was the design of the labels. Like that was the thing that was like holding me back, or I couldn't build a website. And so I hired a marketing agency, and about $100,000 was to get that product launched. And, we launched 11/11/2021. So we're kind of removed from that. But that was to get it launched and runway for a year and a half.
Very impressive, that speed to action. And I love that. I tend to lean more risk averse as well. So I totally can relate and understand the idea. You just want to, we want to test and see what happens, right? Like we learn from experimentation. Shannon, for you, how much to date have you raised, and what was the primary intention for the capital you were raising?
So we've raised, I would say, in relation to how long we've been around, not very much money. We've raised a little over $1 million to date.
Nice.
Our first raise was a pre-seed raise. That was $600K. And then we're raising a seed round now, and we have over $500K trying to raise $1 million. And the first time we raised, I bootstrapped till like $700, $800K in revenue. Nobody would give me money, and I didn't know how to ask for it anyway. So I just
sometimes it's a necessity.
So for a while there, we just sold product and just sustained the business, kind of just mostly me. And then the first raise was really to hire a team. So I brought in my first marketing hire. I brought in my first operator, support on the operations side, and then kind of tried to get myself out of the weeds a little bit. I'm still very in the weeds, but that was the first and foremost use of funds, was to build a team.
Understandable. I have to play devil's advocate here. Since you were already generating significant revenue on your own as a bootstrap business, is there any reason why, when it came time to hire a team, that you chose to go the funding route versus saying, okay, let me figure out my first key hire, reinvest the profits into that role, and then continue to, build and bootstrap? Why give up the equity at that stage?
I think in CPG is kind of a separate category in terms of fundraising, because you need to have free cash flow in order to always support your inventory.
Yes.
So I couldn't necessarily hire people that I needed to and also pay for my inventory. At that time, we were doing wholesale and not a lot of D2C. And so when you do wholesale, you have a longer cash conversion cycle.
Right.
You're buying your inventory months in advance, then you're selling it, and then you're getting you paid back, 30, 45, 60 days after. So you can be making sales but still have no cash.
Yeah.
So that was for me, I was doing pretty much everything on our own. I never made the product in my kitchen, but we came like fairly close to it. Like my whole family was like bottling body oils at one point, and we have like stories about bubbles in our stickers and like all kinds of things that like were way, way, way crazy in the weeds. So it just needed to be something where I just,
Yeah, no, that makes sense.
had to get above the fray a little bit.
Yeah. I think that's one of the first key lessons that I learned in entrepreneurship, is that revenue and cash flow or even profit and cash flow are not the same thing. Like you can look at your P&L, you can look at your books, and you can see a positive, line item for your profit, but you look in the bank and you're like, where is that money? Like I know that it came in, but where, the timing of like when expenses are due, when accounts receivables and invoices are paid, it's an art and a science, right? And so I'm really glad that you brought that piece up.
Yeah, and a lot of it too is like, you might have something that's a 10,000 piece minimum. And so, yes, you just got a PO, but now you have to go buy, $50,000 worth of inventory.
Yeah.
And now you have no cash again.
Yes.
So it is difficult, especially if you don't have a background in finance, which I don't. I definitely don't. So, it's a dance. But thankfully we were able to, that was at the end of 2021. And it was a lot easier to raise money then. So thankfully I was able to do that. Had some great angels back then. And then we started building our team. And then once we started building our team, we started building out agency partners too.
Very nice. I want to circle back to who your first hires were, maybe as we break down how that money was spent. But before we get into that kind of granular data, Bridgitte, I did want to just say, I think it's really admirable that Gut Personal is not only female founded and female led, but that the majority of your investors are also women. Yeah. Was that a priority for you when you were seeking investors? And how did that play into your decision process of who to pitch and who to prioritize?
Yeah. So at the beginning when I was fundraising, my goal was 100% female investors. Actually, I had a girlfriend who had just fundraised $2 million from all female investors.
That's amazing.
And I was like, if she can, and this is honestly a big part of my journey that I want to say, if she can do it, then I can do it too. Which I want, anyone listening to this to understand that if you're hearing our stories and you're inspired by it, you can do it too. So that gave me the confidence to go fundraise in general. But then also I was like, wouldn't it be so cool if they were all females as well? Well, my godfather, who's in private equity, who helped build Dry Bar and TRX, Mackenzie Child, so many others, he wanted to invest. Yeah. And I was like, well, you know what?
Well,
okay.
Can you say no to your godfather?
Yeah. Who helped build these, 9-figure wellness brands. And so it was an absolute yes. And then my mentor, who's also a male, wanted to invest too. So we have 18 investors and 16 are female. It was a huge, very, very important for me. And when I'm building Gut Personal, we have 2 missions. It's really health and wealth of women.
Oh, I like that.
So not only, for my family and my team and what we're building, but for our investors too. And I have this goal that all of my investors, whether they've, invested $10,000 or $50,000, that they can buy a house with their investment. So that's like a driving factor for me too.
That's incredible.
Yeah.
Congratulations on a very successful raise with Powerhouse Women and your godfather.
Thank you.
Shout out. Shout out to great family. Circling back for a moment, Shannon. So you said, a key, I guess, trigger for needing to fund was the hire of team. Can you break down for us, out of the $1 million that you had raised up to that point? I know you're currently also in a new raise round, but like for the $1 million that you had raised, how did you deploy that capital? Can you break it down into categories of where that spend went? Maybe we'll start there, and then on the team side, we can kind of go even more granular and talk about like who were those first essential hires and why.
So, I guess this is very nitty gritty, and tell me if this is too nitty gritty.
Oh, there's no such thing as too nitty gritty on this podcast. We like as much data as possible.
Okay.
Yeah.
So I was raising, or still am raising, on a safe note, which is a simple agreement for future equity. And as opposed to like when you get bigger, you define a price for your shares, and there's a big transaction, lawyers and all of that stuff. When you're raising like a couple $100,000 or $500,000, it doesn't make sense to go through all of that legal stuff, and you also don't have necessarily enough data, enough background to be able to fairly value a company that is that small. So I raise on a safe note, which is basically like a 2-page document. It's something that is like kind of standard across the industry from Y Combinator. Y Combinator?
Yep, that's correct. Yeah.
Yes. Okay. Sorry. I did give birth 3 weeks ago and I can't remember any words.
Literally.
So that's great because like you can get a safe note, you can download it online. You can, I have a lawyer and I always have my lawyer look over everything, but like basically it's, you can get your lawyer to file it for you for a couple $100. But the other nice thing about a safe note is you can open it up and you can bring in checks as they come. So I have never had like I'm raising like $500,000 and here's the date that it comes in, here's the date that it closes. We will get to that point eventually, but the nice thing about safes is you can just kind of have an open safe note. You can bring in checks. So I've never brought in a bigger than a couple $100K at one time. So it was lots of little $25K checks. My very first check was $25K.
From someone you knew? I'm curious. Someone you had a previous relationship with?
Not. I didn't have very many relationships in venture or like the startup ecosphere, which is funny because now things have really changed. But I cold emailed one of my investors, and turns out we know a lot of people now in common, but he wrote me my first $25K check. He had his own small CPG fund, and it was like cold emailing is really hard and it doesn't often work out, but it worked out. And that was my first real check. And he became one of my advisors. He now is at A16Z and he runs the Talent Opportunity Fund there. So, it's interesting. It really helps to have connections, but I did that was my very first check, and it was cold email, like Google search. I think I was looking like CP, and trust me, I sent like hundreds and hundreds, and 95% of them get no response, but it is possible. So it is definitely worth it.
Well, I think too, something I've kind of recently, I've always, I feel like in some way felt this way internally, but to actually voice it as a goal out loud. I was reading $1 Million Weekend by Noah Kagan, and the way he phrased something about creating a goal around collecting as many no's, setting a no goal. So it's like, my no goal this month is 100 or something. And you go out with full force to go collect 100 no's. And if you do, just by putting yourself in the position to be considered for opportunities, there's going to be at least one or two yeses that you probably never would have had you not put yourself out for those rejections. And so I think that's really, really a powerful testament. And I would be remiss not to ask, I don't know if you can remember because it was probably, a while back, but do you have any inkling of what that subject line was that you put in that email to catch his attention, or if you had to follow up multiple times before he replied? Just curious there.
This is so funny. I'm going to see him in a couple of days, so he's at South by, so I want to look that up. I don't remember. I'm sure it wasn't very good. I'm sure it was like CPG company looking for seed funding or something. I've made like every mistake in the book.
Yeah.
So I doubt that it was that good. But
you wouldn't know different had you not, right? Had you not written like 100 emails that got rejected.
Yeah. But the getting used to know, oh man, it doesn't really ever get that much easier. But I've heard so many no's. I try to explain this because, again, I don't have like a family that comes from like a business background. So I try to explain it to my family sometimes, and I'm like how hard it is. I'm like, think of it as like I'm a stand-up comic or something, and I'm just trying to test jokes, but they're all horrible. Or I'm like an actor that's just like constantly going out on auditions and like never having my big break. Like that's kind of like the level of no that you get, and then you have to keep going and going and getting back out there. So I still don't like hearing no's by any means, but also in my mind, I tell myself like, okay, I'm gonna have to probably pitch 50 or 100 people to get 2 yeses. That's just the data.
I like the reverse engineering of that because it reminds me kind of more to, my background in my industry selling digital products, right? It's like we kind of have to reverse engineer. My 2 friends that are sitting in the front, Haley and Jordan, they get this, but
it's a sales pipeline.
Yeah, it's like you set a launch goal and then you think, okay, in order to get this many sales, I will estimate this conversion rate, and then you divide that. You're like, I want 100 sales, so I'm going to divide it by 0.03 if you expect 3% conversion, which leads to X amount of leads, and then you figure out, okay, how much traffic do I have to push to that page to even get those leads? And you just kind of start working backwards and figure out, what that volume, right? Is.
100%. And then, at least it makes the no, it's still not fun, but at least it makes the no like part of your process. You're like, okay, I'm moving that into this bucket now.
Absolutely. Okay, I'm going to circle back with you in a moment. The 25K check. Thank you for sharing that story, by the way, because I really like to hear, where did that first yes come from? But I do want to hear the full breakdown of kind of where else that 1 million was deployed. But I'm going to just quickly punt over to Bridgitte. Your 590,000 that you raised. What did the breakdown of that spend look like? Where were you putting the money in specific amounts?
Yeah. So I'll go to the first fundraise because I think it's easier to think about per fundraise. So for the first fundraise, we raised $425,000. My journey for fundraising is kind of completely different. So I think it's great to share. All of my investors I know deeply and talk to every week. Had a personal relationship with them before they invested. So actually, I have gotten less than a handful of no's, which is just a different process, right? Like I haven't gone out to other people. So I think like I'm listening to that. I'm like, oh, maybe I should be getting more no's. I guess in this next 250 that we have, I'll get some no's and I guess it'll sting, right? Yeah. So we did 425. 100,000 was really to get off the ground. That was, for inventory, marketing. We hired a marketing agency in the beginning. Huge mistake, honestly.
Why?
They were very expensive. I didn't know what I didn't know. They were taking over email marketing, social, website. They were an all-in-one. And now what I know is I feel like 2.5 years in, I'm a little seasoned, but you need experts in all of those areas. And I kind of just delegated. It felt like, looking back, I delegated my whole business to an agency. But we didn't have the bandwidth to do a lot of things, and I didn't know what an abandoned cart sequence was.
Right.
They're like, we're going to set all of this up for you, which sounded fabulous. They were also $16,000 a month.
Wow.
Yeah, woof.
Yeah.
I'm like, oh my God, should I be doing? Anyhow.
So a significant portion of that 100K that you spent towards inventory went also to the agency.
Yeah,
okay.
Absolutely. Like I think about those first couple months, and $100,000 really was to get it off the ground. And then runway for team was really huge. We have our lead dietitian, Jillian, and so she sees our clients. She does a lot of education. She helps me with product and programming. So we had her. Our first full-time hire was a COO.
I'm curious about that decision. So, there's kind of two ways to hire, right? There's like top down, like we're going to bring in like executive leadership and then they're building out the team under them. Yeah. Or you're hiring the way that as a bootstrap business, we kind of worked was we hired fulfillment first, those repetitive tasks. And then if there was a need, you bring in, a leader or a manager above, if there was a large enough department under them. Yeah. But I would love for you to kind of shed a little insight. Why is your first full-time hire a COO at that point?
At that point, I was running another business as well, and I needed a leader. If Traction, if you're familiar with Traction, you have a visionary and then an integrator. And I'm a great visionary. I've also found like I can sit in the integrator seat, but I needed an integrator. And at the time, we also had a 3PL. So, for example, for fulfillment, we didn't need those smaller roles. I needed a leader. I think that's what I needed at the time.
That makes sense, especially given that you were running another business.
Yes.
If you're comfortable sharing, what was your average labor burn at that time? Yeah. Monthly, how much were you spending on team, whether they were contractors or full-time?
Yeah, at the time, my burn was about $30,000.
Okay.
I'd say in the first year, it was steady around 30
$30,000 a month.
And I'd say in the last, just to be so transparent, in the last...
I love it.
Yeah. Isn't that what we're doing here, right? Yeah. My CFO is going to kill me. Don't tell me. So in the last 2.5 years, we've fluxed from anywhere of 30 to $55,000 per month.
And is that just on labor or across all expenses in your business?
Mainly labor. Labor has been our biggest expense.
Okay.
Yeah, mainly labor for that. So awesome. What we're working on actually right now is like pulling back that burn rate and becoming more efficient. So I think most people think burn rate just continues to elevate. Last year, I would say at the beginning of the year was our highest burn rate. We had 4 of us full time. We actually just let go of full-time position, which helped with the burn rate, just becoming more efficient.
Yeah. Yeah. No, that's a very interesting perspective that just because your company scales doesn't mean your expenses have to in tandem
Right.
scale at the same, or at least at the same ratio, right?
Absolutely. And I think hiring a fractional CFO showed me that, because I would say, and actually I was like hesitant to do this podcast because I'm like, my belief is I'm not good with numbers, which I think a lot of people moving from a cubicle to CEO space do. But then I decided I want to do this podcast because it's not my strong suit to say the exact numbers, right? And show other people that, like, you know, we can be a CEO and we can also, you know, hire an incredible fractional CFO to help us understand those numbers. Because truly, for a long time, I just kept hiring and hiring and hiring and spending more and more and more and not being efficient. And so really this third year for us is efficiency and actually bringing down that burn rate, making much, much more profit.
I love that. Bloated team can be one of the greatest killers of, you know, of margin, of just the sustainability of your business as a whole. If you hire too soon, hire too fast, wrong roles, all these things. So that's okay. Let me just really recap. So 100K agency / inventory, you're spending about 30K a month at that point on team and labor.
Yep.
And then where was that remaining spend being allocated?
A small amount of marketing spend. You know, we like
Paid advertising? Is that what you mean?
No.
Oh, okay.
We honestly haven't done any paid ads.
Oh, wow.
At all. So we're actually coming up on like doing that because we've grown mainly through affiliate marketing, which has been awesome because we've brought in sales and then we pay, of course. And we just love that energy as a company is like, if you love this, tell your girlfriend, tell your followers. So majority of our growth has been through affiliate marketing. No paid spend. Events have been really big for us. So about $50,000 were events, and then
Sponsorships?
Sponsorships, yep. And getting my team there and everything like that. So that's pretty much, I mean,
The 425K.
425. Yeah, was all that.
Thank you for being so transparent.
Yeah.
I hope your CFO, it's one of those like, what is it? Ask for forgiveness, not permission.
Yeah.
That's what we're doing here.
Yeah, I was like, I don't think I'm going to ask. Okay. By the way, I run the company, right?
Yeah.
I was like, so this is my decision.
Yeah, it is.
I think that's also an important thing. Like when you start hiring team that like, one of my girlfriends reminded me recently, she's like, by the way, it's your company.
Yeah.
You can decide. And I was like, oh, I'm doing it. So
You get to call
here
the
we
shots.
are.
There you are.
Yeah.
Well, we appreciate that. Thank you so much. Shannon, turning back to you. So you got that 25K check in, you raised about $1 million, just really broad, like high level, kind of where did that pie end up falling?
So definitely talent, team, kind of again, like you were talking about bootstrapped. I like to bring in younger people, a lot of times freelancers who I've worked with for a while, who I know really well. I know they're legit. I know they have a good attitude, and then bring them in and grow with them. So my first marketing director started out with me as a freelancer, and then she came on full time, stayed with me for like 3 or 4 years until someone poached her, which was so annoying. But she
you
did
can look
such
at
good
it
work.
as a compliment that
It is a
you
compliment.
developed and raised her talent enough to be enticing to another company.
And she's a freaking rock star, so maybe I'll poach her back someday.
there you go.
But yeah, so operations, marketing, things that I was doing myself that I needed to kind of, again, like get myself out of the weeds. And then, was able to give people raises and allow them to grow and take on more responsibility. And I'm not a micromanager person. I really want to I've had a lot of great mentors in my career that gave me a lot of chances. And so I want to always create that within my company to make people feel like they have an opportunity to grow and to share in the success together. So that was my 2 full-time hires, operations and marketing. And then we started out with an email agency. That was the first agency I ever brought on because email is basically like your owned channels. So you don't have to pay to play. You're acquiring those emails. You're building up a list. You're setting up your flows, all of that. And a lot of that revenue that comes in from emails can be set it and forget it. So I wanted to start there with email. Then I brought in a PR agency with beauty in particular. Beauty is like a super, super trend-driven industry. And so there's new beauty brands popping up all the time. There's roundups, there's all these different influencers and categories. And, you know, you just look at like Sephora, the new brands that come in, and it's like you have to be top of mind. So I brought in a PR agency that works specifically with beauty brands, still work with them to this day. It's been like 4 years. I still work my email agency today. It's been like 4 or 5 years. I was one of their first clients, and now I probably can't even afford them. I'm grandfathered in at like the OG rate.
Lucky you.
But they've done really, really well. So I try to find partners that like see the potential in me and in my company, and like see the opportunity for growth. And then when those relationships are good, I try to work with people for a long time. That matters a lot to me, is to have real partners
Absolutely.
for the long haul, as long as it makes sense.
So like the agencies, for example,
Yeah.
of the 1 million, what would you estimate you spent on agencies in that first year, let's say?
The first year we didn't spend very much. We really only had email, and we had a little bit of paid. Then maybe PR we brought in like the second year. I would say now, and this is something that I talk to a lot of other founders about, because I am always trying to figure out this balance of when do I bring people in full time and when do I continue to use agencies? There's like pros and cons to both. And so I'm always looking for like the right balance for us in particular. So right now I would say like my agencies, we've gotten, and again, the reason I mentioned that safe note thing is that I've always just brought in checks as they come. So it's more kind of like, you know,
A rolling basis.
a rolling basis, exactly. Which makes my answers kind of slippery, and I don't mean to be. It's just that I'm like, well, this check came in this time, and this one went to that. So I would say probably I spend like $50K a month on agencies right now. And I don't overpay for any of my agencies. Also, I like really do my homework, and like
I mean, they've been with you for 4 years, so obviously,
yeah. But I mean, but agencies can also like come in and be like, hey, like we're gonna do everything for you for $20,000 a month, and overpromise. And hey, I used to work at an agency; it's fine. Like, but I think that's important too, to make sure that like you do your homework, vet people, vet the hell out of agencies. That's the scary thing with an agency, is that they're not part of your internal team, and you are placing a lot of trust in them. And so you really have to vet people and make sure, like, talk to their other clients, make sure that like these people are people that stay with their clients for a long time. I just signed up an Amazon agency, and I just like vetted the shit out of this guy. I talked to like 4 different companies that all work with him. He works in my industry, beauty and personal care, on Amazon. And like every client I talk to has been with him for like 2 or 3 years, and they're making a lot of money. So I think it's really, really important to do that. And just like, you can't take people at face value. It's your baby. And once you're outsourcing some of these important decisions, business changing decisions to people, you really got to know like, okay, this person, we're set up for success, and this is going to be worth the money. Because otherwise, with agencies, not only are you losing money, you're losing time.
Right.
So, and I actually had a very different experience with a fractional CFO. I had a fractional CFO. I told myself the same thing. Like, I'm not good with numbers. I'm not a business person. I don't understand this or that. Like, I just need somebody to like feed it to me. And I had a fractional CFO that was not bad by any means, but I realized that I was allowing somebody else to make financial decisions about my business that I then looked back on later. And there were certain things where I'm like, why did I let myself prioritize paying that thing before this thing or whatever? And it's like, at the end of the day, it's my cash, it's my money, it's my business. I'm the one out there getting the checks. I'm the one out there selling. I'm going to be the one who is going to decide, you know, what I pay and when. And I learned the hard way, for sure. I mean, there was some drama around various things in terms of cash flow. I mean, cash flow is cash is king, right? Can't run out of cash, can't run out of time.
Yep.
And so we had some scary moments there. And now I realize, like, at the end of the day, I'm never letting anybody take over those important decisions until my business is like way bigger and I can hire people that are way smarter than me. Which, like,
but even then, I just have to say, like, I think you can hire people who are more experienced than you in certain areas, but it doesn't mean the complete outsourcing of all decisions, right? I think that's a mistake like a lot of us can go through when we feel less confident in our knowledge in a certain area, right? We feel that, oh, it'd be better if someone else made the decision. But I really do. And we were talking about this earlier on the Cherub panel this morning about how you can outsource execution of something, but really you at the helm of your company still need to be driving those decisions forward. And speaking of decisions, I want to know for the two of you, what is the best thing you have spent money that you've raised on? The best thing where you're like, I would double down if I could go back in time. In fact, I would, triple what I spent because it worked so well. And what is the worst thing you've spent money you've raised on? And what did you learn from that?
I think the best thing I've ever spent money on, there's two things. I'm like trying to decide, like, ooh,
Tell us
which one
both.
is so good? I mean, like, incredible team. I have my incredible lead dietitian who's been with me since the beginning, and she's my right hand when it comes to like building the company, who we're marketing to. So great team, which also, well, I'll say the other thing that's the best thing, events. We've been told to do paid social, for 2 years. And for me, I know that's scalable and I know it's important, which is why we're moving into it. But what was really important to me was building relationships, which really panned out because we not only connected and saw direct ROI from events.
Right.
We then connected with affiliates who are incredible for us. We've built a community where a lot of online brands don't have that community.
Yeah.
Our customers, our ambitious women that we are so driven by, we've connected with them in person. They know us. They've hugged us. One came up to us at an event this morning who I'd never met in person, is one of our top affiliates. So that's really important for us. So incredible team, and then events. I would say on the flip side, the worst thing that I've spent money on has been team in the way of unaligned partners, unaligned teammates, which means I think the worst hire I ever had, it was very much a core value misalignment.
And did you sense that from the get-go, or was it something you only discovered when they were already
on the team? It became apparent about month 2. How, our core values are everything is figure outable, gratitude always, not only for ourselves, our teammates, but our customers. And that core value couldn't have been farther from the truth, even though we were interviewing,
Right.
based on those things. You just don't know
until you see it in practice, because anyone can say anything in an interview, right?
Yeah, exactly.
Yeah.
So, yeah, I would say those are mine.
Okay, I'm gonna put you in the vulnerability hot seat if you feel comfortable answering. I know something that in talking with my peers, a lot of us have struggled with is exactly that situation, hiring someone that either isn't aligned with our core values or maybe is a great person, but just a really bad fit for the actual skill of the role, right? So like for you said about month 2, you became aware that this person probably wasn't the right fit. How much longer did you wait to actually take action on removing them from your team?
2 days.
Oh, wow.
Yeah,
You're
I
like a
told you
rarity.
I'm an action taker.
Look at you.
girlfriend. I'm an action taker in building my business, and also when there's misalignment,
Nice.
I do a lot of, and I want to say this because we're talking a lot of numbers, but I do a lot of inner work to listening to what is my gut and instinct saying, because it's really powerful.
Yeah.
So 2 days. Yep.
Wow.
And she was gone.
Impressive.
I also want to say with team and knowing they're not the right fit, on a similar point of that is that I had another team member who's my director of operations. She was my best friend of 24 years. She came from our manufacturer, so she was in the supplement manufacturing space,
Right.
which was perfect for
Really well versed for this
it was,
background. Yeah.
a perfect role, seemingly, and I knew she wasn't a great fit about a year in. And that decision, now this decision of this person I didn't know, 2 days.
Yeah.
But I also want to say that my best friend of 24 years, that was about, I'll say 6 months that I was dragging that decision out.
Yeah.
Because it was such a tough one. She
Right.
was my maid of honor to
Yeah.
be like ultra transparent. So I let her go in January. It was incredibly hard.
Yeah.
Incredibly hard, but
Coming on the other side of it, though,
best
how does it
decision.
feel now?
So
Yeah.
good. Yeah, really good. Really good. Thank you.
Yeah, no, thank you for sharing. I can relate. I also still best friends to this day, and I think our relationship is honestly even stronger for it now that we don't have work in the
Yes.
mix. But I also had hired my best friend, and that was tough when our business model shifted and the role I had originally hired for was no longer the role that we needed. And I also, because you want to protect the people you love, but ultimately your business is also something that needs to be protected for there to be a job for anyone, right?
1000%.
Yeah, I commend you for following through on the tough stuff that I can imagine because I've been there.
Yes.
Yeah.
Woof.
And then Shannon, what about you? What is the best thing you've spent, the money you've raised, and the worst thing you've spent?
Well, a regret that I have not, of money I wish I would have spent is,
Oh, that you wish you would have spent and did not.
this is just
Okay.
a little caveat, but I wish that I had spent money on paid ads when it was cheap to acquire customers.
Yeah.
Because it's a whole different world now. I really do though. I look back at it and I'm like, it's like wanting to like have bought Bitcoin like 10 years ago or something.
Yeah.
Like it's never gonna be that cheap again. So I have a lot of friends who are my coworkers. I always wanted to work with my friends. And I never had, my husband is my partner, but he does like the fun, glamorous stuff. I do like everything else. So I always wanted a co-founder, and it is very lonely being a solo founder. So one of the things that I would say that I have spent on basically creating community for myself and also investing in myself. And I'm kind of cheap about a lot of these things. So very specifically, I have a couple examples. So one of them, I have a founders group called Hampton that I'm part of. That is basically for founders who have made over $1 million in revenue or raised more than $3 million. And I have a group of like 6 or 7 founders in my group. We all come from different industries, but we all have little kids. And it's kind of like that co-founder, like friend relationship mixed with like therapy where like we cry sometimes and it's guys and girls and we just like talk about everything in our families and our businesses. And so that paying for that, it's like between $5,000 and $10,000. It wasn't cheap. I was kind of like, I probably shouldn't be spending money on this right now. But do I need like therapy and group coaching? Yes. And so it also has led to a network, and it's just like been a really good tool for me professionally and emotionally. The other thing that I spent money on for myself is I felt like I lost myself in the process of raising multiple times. And I tried to be a student of like how to raise, how to run a fundraise. Don't come from this background. And so I've really like doubled down on it and tried to study it as much as I could. And I went through an accelerator program here in Austin called SKU in 2020, which helped me prepare a little bit for some of that. But at a certain point, I was like, I'm losing my mind. I don't know how to raise. It's so intimidating and it's so hard. And I'm by myself in this journey. And so I found a guy who online, he runs an accelerator cohort it's called Fundraise with Confidence. His name is Jason Ye, and he's a really awesome, special person. He used to be a VC, he used to be a founder, but he teaches you like straight up, like this is, and it's like a 5 or 6 week course, and it was like $5,000 or something like that, $6,000. Which at the time, again, like I remember I had a conversation with my husband, and he was like, "Why are you spending your money on this?" And I'm like, I have to, this is something I need to go through. Give me a template, give me a curriculum. Like I miss being in school.
You need like a step-by-step.
Yeah, I need a step-by-step, like give me those things and then I can do it, and then I can do it with confidence. And so, those spends on my founder group where I do my group therapy. It's not actually called that. I always call it group therapy, but my founder group and that community, and then, taking this course with someone like Jason who like really, really like nitty gritty, like we did like 3-hour classes every single week, homework, like all of this stuff. And so now I know so much about running an investment process, things to look out for, valuation. Like I learned it. I learned all of that shit, and I didn't know it before, and I forced myself to, and I spent the money on it because I was like, I'm not going to be able to. I can't white knuckle this really. So spending money on myself where I knew it was like something specific that like I really needed to make me a better founder and person was really important. And then the worst thing. I don't know if there's one worse thing except that
Maybe something you spent money on that you're like, I wouldn't do that again if I had a do-over.
Anything that is just too expensive and is too much of a gamble. I mean, I'm just like, and I think that this is the thing, right? We're talking about angel investors. Like, I also am the steward of other people's money.
Yeah.
And so I'm not going to go and like, it's not just like, I know there's like huge VCs that throw around like hundreds of millions of dollars, but I've raised primarily from angels. I've raised almost exclusively from women and from like non-white guys. My job is to grow my company. My job is to take those dollars and turn that $1 into 2 and 3 and 4 and 10 eventually. And I just don't want to, there's a lot of like flashy marketing opportunities and gifting things and, send this to this influencer house that are, have big price tags. And I'm just like, unless I know, and I've done my research that there is ROI in this, my business is too small and people are invested in me and my business with their hard-earned money. And that means a lot to me. So I take it really seriously, and I just don't, a $25K sponsorship for a conference or for some big, person who has like 2 million followers. Like, I don't know. That kind of stuff would have seemed flashy and fun to me at one point, but now I'm just like, I don't really give a shit. Like, I'd rather just, spend that money like in R&D making really cool product, because at the end of the day, that's what I like to do, and that's what like works for my company. So,
I think that's a lot of wisdom, and two things that I was hearing that I want to pull out for our listeners who are not here live with us that really stood out to me. One, I think, is, you are your own best personal asset always, right? So like the more you can invest in your learning and growth, I think there's never not an ROI on that. So it's like you're the one thing you can bet on, right? If you're going to put your money somewhere. And then I think the other thing too, like you said, is like being very clear about what is the pathway to returning the investment. Because to me, expensive is relative, right? Because I mean, if something's $100,000, is that theoretically expensive? Yes. But if you knew for certain within 60 days that would turn into 200,000, would you still consider it expensive? No, right? Like if we know we're going to feed in $1 and get back 2, it's no longer a conversation of expense, but rather where do we go find that money, right? So I wanted to just pull that out. I know we are wrapping up. So my final, answer this in 30 seconds or less. What is the most creative way you have ever stretched $1 in your business?
Okay, so this isn't going to be very sexy, but I think when we invest in our affiliates, when we gift product to the right people, that dollar, those couple dollars, let's say we just had a prenatal launch, that was maybe a $40 to us product. Yeah. Just people sharing it, I think really, I don't know, for me, that's amplification. Yeah. Right. It's there's no ceiling to it, right? Is someone saying to someone else, I love this prenatal, it's changed my energy in my hair. Them telling another girlfriend, I just love that type of grassroots marketing. And so when I talk about amplifying $1, I think about it in those terms. So
I love that.
I hope that answered your question.
Yes, that's a great take. Thank you, Bridgitte. Yes. And Shannon, what about you?
I totally agree with you about gifting. Gifting is sometimes it's kind of a tough pill to swallow, because you're like, oh, I'm giving away all this free product. Then you think about your cogs and you're like, it's not. And then every now and then you get a really big home run. Yeah. I had Halle Berry talking about my body wash for 3 paragraphs in New York Magazine.
That's so awesome.
That was just an organic thing. We ended up connecting with her. She has a wellness platform. So when it comes back in spades, which I think is so. Gift product, you want to get your product into people's hands if you possibly can, especially if your product is good. people are going to smell it, feel it, love it, try it, feel better. And so that is always a good thing that you can do. And then I guess my other thing is just like do it yourself as much as you can. It is not fun, but like I'm so scrappy. Like I'll tell you a ridiculous story. We were in the Goop gift guide. We've been in the Goop gift guide for the last couple of years. And I can't remember what happened with our boxes. Why were they messed up? They were late. Oh, okay. So our boxes for this set that was going in the Goop gift guide was late. And it was like stuck like on a plane coming from China. Like it was horrible. And the deadline for Goop was coming up. And I was like, I can't not have my Goop gift guide because of my freaking boxes
on a plane.
And there was like on a plane. And like, this isn't really a good example of stretching a dollar because there was nothing we could have done. But it's an example of being like crazy, scrappy, and psycho. So I told my husband, it was only like 50 units or something. I was like, we got to make these boxes. And he was like, what are you talking about? And I was like, we have to make them. So we went to like Michael's and like and we literally like had our razor blade and we like, I mean, I'm saying it was actually not me at all. It was totally him. But like we made the boxes and I know that sounds really weird, but they looked like perfect. And we like printed them at FedEx. We like DIY'd these 30 or 50 boxes to hit the Goop deadline.
That is
and
epic.
I was like driving around like pregnant at night, like trying to find like the right size, like thickness of white cardboard. So that we could go home and it took like, and he was really annoyed with me and it like wasted our entire weekend, but we got,
you got it done. You got it done.
Yes. Yeah. We went to Michael's, we got it done. And I mean, this is like 6 years into my business and I'm still doing stuff like this. But to me, that's like the thing you got to do is just jump in to all the crazy scenarios. And then hopefully someday you won't have boxes getting stuck on planes, but that's probably not true. So it's all part of
I think that wonderfully sums up the experience of being a founder and an entrepreneur, right? Is that there is always a new challenge, a new problem, a new boss to be, and you just keep going. So thank you both so much for your honesty, for your transparency today. Where can our listeners continue to connect with you? Give us your website, your socials, a shout.
So I'm Bridgitte Malley on Instagram, which is where I hang out. If you connected with anything today and want to come say hi, please do. And then we're gut.personal on Instagram. That's where we share all education on gut health, female health, women's hormones, all that good stuff. So come hang out.
Thanks, Bridgitte.
We are Esker Beauty on Instagram. I do not have a public Instagram because it's just pictures of my children. I'm on LinkedIn, Shannon E. Davenport on LinkedIn, and a little bit of Twitter. I'm at FF the Brave on Twitter, but mostly I lurk on Twitter.
We love a good lurking platform. That's Threads for me. Yeah. Awesome. Thank you both so much. And thank you to all of you who are here today, live and in person. We love getting the energy. Thank you.
Thank you.